A good tax system should meet the five basic characteristics: fairness, adequacy, simplicity, transparency, and administrative ease. Fairness or equity means that everyone should pay a fair share of taxes. There are two important concepts of equity: horizontal equity and vertical equity. Horizontal equity means that taxpayers in similar financial conditions should pay similar amounts in taxes. Vertical equity is just as important. However, vertical equity means that taxpayers who are better off should pay at least the same proportion of income taxes as those who are less well off. Vertical equity involves classifying taxes as regressive, proportional, or progressive. A regressive tax, if those with low incomes pay a larger share of income in taxes than those with higher incomes. Almost any tax on necessities is regressive because lower income people must spend a larger share of their income on the necessities and thus in taxes. Oklahoma's sales tax is one example. Lower income residents pay as much larger share of their incomes for groceries and other necessities than higher income ones, so the sales tax takes more of their income. Proportional tax is if all the taxpayers pay the same share in income and taxes. No taxes are truly proportional. Property taxes often come closest since there is a close relationship between a household income and the value of the property in which they live. Corporate income taxes often approach proportional because one rate applies to most corporate income. Progressive taxes require higher income individuals to pay a higher share of their income in taxes. The philosophy behind progressive tax is that higher income people can afford and should be expected to provide a bigger share of public services than those who are less able to pay. The federal income tax is the best example of a progressive tax. The Internal Revenue Service reports that the top 1% of taxpayers by income paid 40% of the taxes in 2005. While no system of taxes is important, it is important to seek horizontal equity because taxpayers must believe that they are treated equally. It is also just as important to seek vertical equity so that the government does not burden the low-income residents. Adequacy means that taxes must provide enough revenue to meet the basic needs of society. A tax system meets the test of adequacy if it provides enough revenue to meet the demand for public services. If revenue growth each year is enough to fund the growth of costs of services, and if there is enough economic activity in the type being taxed so rates can be kept relatively low. Transparency means that taxpayers and leaders can easily find information about the tax system and how tax money is used. Administrative ease means that the tax system is not too complicated or costly for either taxpayers or tax collectors.